Welkom bij een nieuwe KoersKompas-podcast. Vandaag heb ik iemand van Doomberg te gast, een van de meest populaire financiële platformen op aarde. Mr. Doomberg, welcome to the show.
Bart, great to be here. Looking forward to it.
Awesome. Let's maybe kick it off with a brief introduction to the viewers here.
Yeah, sure. I'm the head author of the Doomberg Substack. We're an anonymous team of analysts that focus on energy, finance, and geopolitics. We write on the Substack platform, have been doing so since 2021, just celebrated our 4th anniversary. And we publish 7 to 9 times a week and a monthly webinar for our pro subscribers, and are having a blast doing it.
Yep, and you guys are good as well. Congratulations, by the way.
Yeah, thank you.
Maybe let's also start with a 20,000-foot view here, so to speak. Your thoughts on commodities here in general, the commodity markets there, because there's some people out there, the macro guys, I guess, are looking also. You could look at it from 2 points of view here. They're looking at the lower dollar. They're like, okay, well, this is going to put the wind in the sails of the commodities trade here. These things are going to be worthwhile investing in again. And then on the other side of the spectrum, I suppose you have people that are saying, well, there's going to be a major recession and these things are not going to have their day in the sun just yet, or not for a long time, maybe. Where are you? What side of the spectrum are you?
Yeah, when we look at the macro view of the energy markets, the first thing we like to do is plot on the same chart, all in the same units. Our preferred units are dollars per million BTU. We look at the price of natural gas in the US. We look at the price of landed LNG. We look at the price of coal, and we look at the price of Brent crude. And when we plot those 4 commodities on the same chart, the thing that jumps out of us is that the markets are very well supplied. Everything is trading as it should. Natural gas, of course, in the US is the cheapest on the board. Trading sort of in lockstep now with coal because they're both predominantly used to make electricity. Brent crude and landed LNG in Europe using the Dutch TTF contract are trading in unison on a dollars per million BTU basis as well. And that tells me that those markets are fairly well balanced as well. Whenever we see wild gyrations in that chart, we know that there is a shortage of supply in an important commodity somewhere in the world, and the fungibility and the timing of the fungibility then dictates how long the arbitrages will take to close. Oil is going lower in our view. There's plenty of it, and contrary to sort of the perennial fears of people who believe in peak cheap oil or other related theories, there's so much oil underground. And on top of that, we're learning how to substitute oil for natural gas because natural gas is so much cheaper than oil in the US. The very presence of the OPEC cartel is the catalyst for its eventual collapse, and we think the final days of OPEC are upon us. The Saudi announcement earlier this week was fascinating to us. Oil very, very much in a sort of macro headwind environment. And the last thing I would say is, of course, yes, the tariff wars have disrupted the economy substantially. This is not bullish for demand. So we would not be looking to get long commodities in this market. I suppose they have to bottom eventually, but we don't like to try and call bottoms around here.
Right. So one commodity has certainly done well recently. With a big blow off top here, up from 3,000 to 3,500, I think. And I was correct a little bit in like a month. In a month's time, one hell of a move for a commodity, or some wouldn't even say it's a commodity at all. Here, we're talking about gold, obviously. What are your thoughts here on gold? Would you lump it in with the other commodities here? Do you think maybe it had its peak here, or is there something special there?
Yeah, we wouldn't view gold as a commodity to be compared against oil or diesel or natural gas. Gold is kind of the anchor of the global economy, and all other numbers rotate around it. So when we say the price of gold is, quote, going up, what's really going on is the purchasing power as measured in ounces of gold of the US dollar is going down. Having said that, I personally live in a US dollar denominated economy, and anytime I see a sort of blow off top Icarus print like we saw in gold, I'd like to take a little bit off the table, especially if I own a lot of that thing. And I do own a lot of gold still, but I took a fair bit of my gold off in the sort of 3,300 plus range. Didn't quite catch the top, but I'm okay. It's just a bit of risk management. I should say we don't view gold as an investment. We view gold as a savings vehicle. Gold is just one of the asset classes that I personally use to save, land and collectibles being the others. And so I really just reallocated from gold to the other savings vehicles, mostly because gold became too large of a portion of my savings portfolio. And when you see prints like that, it's usually a pretty good time to sell into that strength, which is what I did. Now, I still own, again, a fair amount of gold. Long term, I wouldn't sell all of my gold. I may add back a little bit if we weaken here, but by and large, I like to keep a core position and then manage around it based on how the stock chart looks.
Right. Switch to maybe a little bit of geopolitics here. Will the US start playing resource games like China, Russia, and France securing supply of energy and metals abroad?
The US has no need to play such games anymore, and frankly, we wish that they would stop trying to do so. The US is the global energy gigapower. It produces 20% of the world's oil. It produces almost 30% of the world's natural gas, maybe 20, 25, 26% of the world's natural gas. It has among the largest reserves of coal. It has 93 operating nuclear power plants. It has all the food and fertilizer and chemicals it could ever need. Much of the misadventures of U.S. foreign policy in the past 60 years have arisen from the false fear that the world was running out of fossil fuels. Hubbard's peak in U.S. crude oil production topping off in the 1970s is what led to a lot of these adventures, especially the ever-growing entanglements that the U.S. has found itself in the Middle East and surrounding areas. We don't have to do that anymore. Wish we wouldn't. When I say we, I mean the United States. This is where I live. And so we can't seem to resist the temptation to get ourselves into wars. And I see that we are sort of barreling towards one now with potentially Iran and China, as though battling Russia wasn't enough.
Right. Let's see. Maybe switch over to also a topic that I like to discuss, nuclear. Do you see the US announcing new AP1000 build programs anytime soon? They really do seem to be hinting at something like that coming up if you look at all the rhetoric, but of course these guys are politicians, so you never really know. But what are your thoughts here?
I think it's important to recognize that the incoming or the new Secretary of Energy, an executive from the oil and gas sector named Christopher Wright, is a staunchly pro-energy abundance politician now. He was an executive before. He comes again with very significant industrial experience. And he has a very strong pro-growth agenda for supply of energy, which, by the way, if you're a producer, isn't necessarily great for your stock price. But also, he sat on the board of a nuclear startup and understands the nuclear industry quite well. And he is, as you say, dropping very strong hints and various public statements that the U.S. will be making a major announcement here soon. I don't think those announcements are necessarily the thing to watch. What really needs to happen in the U.S. for the realization of the next leg of the U.S. nuclear renaissance, because look, a country with 93 nuclear reactors can't say that it is starved of the technology, is really a reform of the NRC, the Nuclear Regulatory Commission. This has been the key constraint to the development of new nuclear in the U.S. All the litigation around getting permitting and the environmental opposition and so on. Streamlining all of that is really what is key. And I think we're going to see some major moves in that direction. And that's what we would watch because, it's one thing to announce grandiose plans, but if you do not remove the constraint to the realization of those plans, then they're nothing more than what we would call happy talk. And so that's what we would keep an eye on. Reform at the NRC, whether President Trump's American Energy Dominance Committee, which includes both Christopher Wright, who I just mentioned, and the Secretary of the Interior, Whether they actually tackle that problem and succeed in doing so is the key question of the first 12 to 18 months of the Trump administration with regards to nuclear energy.
Right. Maybe a side subject, so to speak, of the nuclear thingy, uranium here. There seems to be some interest of some players that are very familiar with the space to go into America here. They think that maybe America can have its own uranium renaissance, which of course is very far off when you're pretty much producing nothing at all. But do you think there'll be some help from the government that to also get some uranium production back at home, because they used to produce one hell of a lot of uranium. I think they were the biggest producer like 50 years ago, and now they produce basically nothing at all. Do you think they'll maybe make it back to 5 million pounds, 10 million, maybe 15 in 10 or 20 years?
I don't think that's actually what matters to the U.S. at the moment. I think the story about investment and sort of growth in the uranium space in the U.S. is more an enrichment story than a mining story for a couple of reasons. Of course, the U.S. is very dependent on Russian enriched uranium to keep its existing fleet operating. And this is both a strategic vulnerability, but also limits what they can do vis-a-vis Russia, because Russia holds the trump card in this regard. When it comes to actual supply, Canada, I think, is probably an area where we would see more excitement and growth. They have some of the most amazing uranium deposits in the world, and bringing them to market relatively soon. And we, of course, separately think that this whole US-Canada trade war is going to be wrapped up in a grand bargain here pretty soon. And so long term, there isn't really all that much need for uranium concentrate coming from the US. There's plenty of that to be had on the open market. The biggest issue, I think, is enrichment, which is actually what occurs, as you know, before you can take your fuel and put it in the reactor.
Right. So you're generally bearish on the energy space here. What are some signals here that you're expecting maybe this year or later on that could turn this thing around, that would make you go from bearish to a neutral or very bullish?
The commodity we keep the closest eye on for a variety of reasons is natural gas in the US in general, and natural gas in the Permian Basin in particular. I should take a moment to perhaps explain to those less familiar with the dynamics of the oil industry and how the shale sector has really upended that dynamic. There are basically now three types of oil and gas producers in the world. There are those who produce only crude oil. There are those who produce only natural gas. And then there are those who produce a mixture of the two, associated gas that comes along with typically very light crude oil, like we see in the Permian Basin. In the US, half of the US's crude and 3/4 of its natural gas now comes from producers who produce both. And that's actually a really important change to market dynamics, because you now have to worry about supply and demand dynamics for two commodities, and you have a classic byproduct economic situation where the price of one, if it is elevated, might motivate you to keep drilling and you get a glut of the other, or vice versa. And this is what's happening in the natural gas market in the US. OPEC, having kept the price of crude artificially too high, motivated the co-producers to keep drilling for oil, and then we have this glut of natural gas in the US. And so in the Permian Basin, which is the home of much of the growth of US crude, the country has gone from nothing to more than 20 BCF per day of natural gas production. By the way, to give you some context, that's more than Qatar produces in its entirety, just from one shale patch in the United States. And yet, at the Waha hub in Texas, which is the benchmark for Permian Basin natural gas, prices have been negative. They're paying people to take natural gas away, at least in the spot market. And so if we could see the beginnings of elevated prices for natural gas in the US, driven by the the need to power AI data centers with a clean fuel, you could see an interesting situation where instead of drilling for oil and having to do something with the natural gas, the swing producers are drilling for the natural gas and are looking to do something with the oil. And that would be, of course, further bearish for for global crude prices. It works both ways, co-product economics. And there is a scenario, hasn't really materialized yet, where a spike in demand for natural gas in the US drives a spike in supply of crude oil, which further puts a cap on the upward mobility of the price of crude oil. Don't see it yet because there's just so much supply. But, at today, the spot price of natural gas at the Waha Hub is $1.60 per million BTU. Just to give your viewers and listeners an idea of what that price means, that's about $10 a barrel oil on an energy basis. So you can get a clean burning fuel for $10 a barrel in the Permian today, even cheaper in Alberta and British Columbia, where that gas is largely trapped. So if we do see a wave of data centers built out in these locations and that excess natural gas gets mopped up, we could see some pretty interesting dynamics in the oil markets globally.
Right. Something that has also been a hot topic lately here, of course, are the rare earth minerals. Do you have what are your thoughts on that one?
This is this whole rare earth discussion is a bit bewildering as somebody with industrial expertise. The actual presence of rare earths isn't that rare. There's plenty of them. The biggest challenge here, again, like we talked about with uranium, is in the processing of rare earths from concentrate to purified metal suitable for use in, say, magnets and electric motors and so on. China has a 100% share, basically, on that step of the value chain. Why? Well, it is an environmentally very taxing thing to do. You create a lot of water that needs to be treated and all kinds of byproducts that need to be properly disposed of. And China, of course, doesn't have the world's greatest reputation for environmental stewardship. And because its companies are permitted to operate with more degrees of freedom in the environmental realm than, say, a European or an American or a Canadian or an Australian company can, the world effectively outsourced all of its processing to China. So no matter where you're mining rare earths, Ukraine, Montana, Australia, Newfoundland, all of that eventually goes on a boat and goes to China and gets turned into metal. So they own a monopoly position on the choke point. So what needs to happen in the West, if we care about the national security implications of China having monopoly position in these important commodities, we need to begin to develop refiners, refining facilities that take concentrate from mines from around the world and convert it into purified metal. We have to roll up our sleeves and do the dirty work that we have decided is best done in China. And frankly, I don't see much in the way of movement anywhere on the actual problem, but a lot of talk about needs and strategic vulnerabilities. And so it is what it is, but that is our view of that market.
Right. Yeah. Is there anything else that you want to touch upon that you think is interesting that's going on here that's top of mind?
Yeah, sure. I think related to the energy story is the chip race, and we're putting out a piece early next week on how China is actually winning the chip war because of sanctions. This, of course, is of interest to the Dutch because of ASML. We think China is making giant leaps of technology, and the West is sort of in denial about this. We have seen this movie many, many times. And the announcement from Huawei of its new Ascend 910 C chip, which is gaining some excitement, is sort of the thrust of our piece and what it means. And we take a bit of a contrarian view. We believe that China is winning the chip war because of the sanctions, not in spite of them. It is the sanctions themselves, much like how the sanctions backfired against Russia, that is driving China to get into a war mindset, that is causing China to develop its domestic industry at a far greater pace than it otherwise would have, and they're going to succeed. That is our view. This has significant ramifications for ASML, of course, and for NVIDIA and other tech leaders. And it's also, of course, very much tied into the energy side of the equation as well, because to power all of these data centers requires cheap energy, and that's why China is burning so much coal and building so many coal plants. And so that is the one thing that I wanted to mention here in addition to what we already talked about, especially given the audience.
Yep. Maybe one additional one before we wrap it up here. How realistic are these build programs of Chinese nuclear? Do you think they'll get the full numbers done, or is that going to be a little bit hopeful?
Oh, I think they'll get it done and more. They are churning out reactors at a pace and for a cost that the West could only dream of doing. China is executing a very thoughtful, holistic strategy as it pertains to energy. We did a Doom Zoom webinar last year for our pro tier called The Year of the Dragon, China Through the Lens of Energy, where we did a 45-minute analysis of the full aspects of the Chinese energy situation. And what comes out at you when you're finished that analysis is just how strategic the CCP is. We underestimate them at our own peril. So they are building out nuclear at record pace. They will soon surpass the US for installed nuclear capacity, we believe soon, within a decade. They are, of course, burning half of the world's coal, building all manner of pipeline for natural gas imports and also LNG import terminals as well, building a stronger and stronger relationship with Russia. We expect to see, for example, Power Siberia 2 announced during the Victory Day celebrations in Moscow when Xi Jinping visits. That's a bit of a prediction. That, of course, is a giant natural gas pipeline that would redirect molecules that used to go to Europe south to China. We think that deal might finally get done here. So yeah, China's very serious about its nuclear ambitions. We would not underestimate the pace with which we're going to see this development. China has the major strategic vulnerabilities that it has are crude oil, which is sort of a proxy for energy, and semiconductors, and they're making national priorities out of closing both of those vulnerabilities, and we would not bet against them in that regard.
Yeah. It's a lot of info in a small package. Thank you a lot for coming on. I appreciate it. You had great views. Thank you very much.
Appreciate it. Great to talk to you, Bart.
Thank you.